First and foremost, we have to talk about the latest and greatest of bank failures, shotgun weddings, and what might be coming next. First, let's jump into Credit Suisse. Credit Suisse shotgun wedding by UBS was something that actually sent shivers down my spine. Not that we didn't call it, because we did, but it was the price. When I saw the price that UBS paid for this bank, this big bank, this too big to fail bank, I was scared for the Monday open. Now, the Monday is open. So far, it hasn't gone the way I feared, but I want to share with you my logic just so you see what I feared on Sunday. So here's the deal. UBS is a publicly traded company. At the close of Friday, UBS market cap, I believe, was about $7 billion. About. On Sunday, after several rounds of negotiation, the purchase price came in at roughly $3.2 billion. So rough math says that's about a 60% discount to Friday's close. Now, if you've been in the game long enough, you know that acquirers usually pay over existing market cap. Folks, we are not in that time. This bank has lots of problems. So UBS got a discount, okay? Those are facts. This is how my brain incorrectly was wrong. Fully admit it, but I want you to know what I was thinking. I was like, holy cow, if UBS was valued at 7, got bought by 3.2 from a willing buyer, right? That's how this works. Supply, demand, willing buyer, they meet in the middle or they meet at the price. My fear on Monday morning was that all banks, including the big banks, would take haircuts. Now, thankfully, that hasn't happened, at least yet. But what we are clearly seeing in the market, we are clearly seeing that equity is not safe. We are seeing bonds not safe. We are, again, seeing a liquidity crisis like few have experienced before. So it is going to be very interesting to see what happens next. I believe there are plenty of PhDs, MBAs combing the balance sheet of the biggest banks looking for who might have, how should I say this, an overstated value, and they are going to go short. It hasn't happened yet, but this was the fear I had Sunday, and I was thankful that it didn't happen because that could have injured consumer psychology even more. So that's Credit Suisse. That was a fear. It didn't happen. I was wrong, at least thus far. Next, let's go to Signature Bank first. Signature Bank, that bank that failed on Sunday out of New York. It looks like Signature Bank has found a buyer with just a wee bit of a caveat we need to talk about. So again, a subsidiary of New York Community Bank Corp. Makes sense. New York Bank Corp. Not one of the big ones, kind of that middle tier subsidiary buying Signature. However, again, folks, these balance sheets are not pristine. Let's just be honest with each other. They are not currently pristine. New York Community Bank Corp subsidiary buying Signature Bank, but leaving $60 billion of loans behind and about $4 billion in deposits. So let me ask you this question. Why do you think New York Community Bank left those $60 billion at Signature Bank? Because they're garbage, people. They're garbage. They're not worth nearly par value, which is 100%. They're worth something lower, and they didn't want to sell them at distressed prices because they hope the market liquidity opens up. This is another sign that, to me, much like Credit Suisse, these balance sheets may not be as pristine as they want them or want us to think. Now, Silicon Valley Bank. Silicon Valley Bank, going into its third week, does not have a buyer. What you are going to see now is you are going to see Silicon Valley Bank likely broken up in parts. The best asset, the best stuff sold off probably to private equity. I believe the FDIC and the government wants it to be mid-tier banks. But at this point, FDIC and the government can't be picky. It just can't. Silicon Valley Bank, again, once valued at $200 billion or so, their balance sheet is crap. Why else would somebody not buy it after 2 weeks of due diligence? You have to ask yourself these questions. This is the beginning. It's the beginning of the beginning. So we have to look into this. So that is what is going on in the market today. I did see First Republic trading down. We'll talk more about regional banks in a moment, but I wanted to share with you my thoughts about the big banks. I am again happy that I was wrong about Credit Suisse contagion. I guess that's what I was worried about is, wow, 60% discount on Friday close. What could we see over here? Next, we have some housing price data. Some very, very recent, we have price data and weekly data. Folks, if you remember back in January, I made a call that we will have four negative year-on-year numbers. They will be in a row. Well, it started in February. This is according to Redfin. We will, of course, wait for the almighty Case-Shiller, but damn, we won't get that till April. It is so far behind. Redfin has the latest and greatest data. So Redfin just published an article that says year over year, national median home price fell 1.2%. Crash Bros must be right. They're not right. Fell 1.2%. We're going to have 4 months. Why are we going to have 4 months? Because if you go back on my channel and you listen to Beth Traverso, you listen to Omar, you listen to Adrian, you listen to the agents that I bring on the channel every week, they were telling you about people overpaying. Beth told you about people going $500K over asking, releasing EMD funds, waiving inspections. This is when we had about 250 or 280,000 listings. It was bananas. It was unhealthy. It was a complete and utter chaos. So we are going to have 4 months in a row of negative year-on-year growth. February. Something that I think is intellectually dishonest about the Crash Bros. Did you know in the exact same report, they have failed to talk about the median home price from January to February. Now, why would they fail to do that? The answer is simple. The month-on-month story does not feed their narrative. The month-on-month numbers, January to February, the median home price, did it go down? Folks, the median home price went up, and I want to make sure I have the right number, went up 1%. Yes, folks, housing went up 1.1%. You can see the uptick. I don't know what to tell you. So again, I don't like the fact that they continue their narrative. And also, anybody else, I mean, seriously, anybody else particularly bothered that these individuals are out trying to buy homes but continue to tell their fanboys not to buy? Anybody, does that sit well with you? That doesn't feel very good. But I digress. Lots of people want to be told not to do this, not to do that. Lots of people want excuses. There you go. So again, folks, want to be clear. We are going to have 4 negative year-on-year numbers. It'll be February, March, April, and likely May. However, month on month, from January to February, prices went up. Next, even more relevant. Folks, if you're not following Logan from Housing Wire on Twitter, you are missing out. He has a weekly housing statistics that come out every Monday. It is a must follow. Again, Logan and Housing Wire. So what happened last week? Last week, would it shock you that last week new listings were down 30% from last year? No, they were down 30% from last week. Last week. Yeah. No, last year. Sorry. Let's get the right number. Last year. So last week, 42,407 homes were listed. Last year, 55,348. What do I keep telling you? The spring selling season is not coming. It is broken for years. People are staying put. And what happens when supply goes down and now interest rates go down? Do the work yourself. Learn your market. Get a buy box. Stop listening to folks out there. Do the work yourself. Find out what is going on in your market. What else happened last week? It looks like purchase applications are up 7%. And then lastly, at the end of Logan's weekly Housing Wire article, he said, home builders are going to do better in this environment as rates come in and inventory doesn't show up. What have I been telling you is going to shock people over the next month to 6 months to year? Is new home construction will do much better. I know it's very popular to say home builders are going to lose their money and go bankrupt. It's not how it works. They've all slowed down. They're not over their ski tips. They have multiple levels to pull. Rate buy downs, 2.1, 2-1 buy downs, buying in 30-year money down to the 4s. And oh, by the way, they can build smaller homes. So I'm sorry to disappoint you if that's what you were hoping for, but I believe home builders are going to do quite well in the environment we are in because they are competing against less existing home sales. Goldman Sachs is out saying they do not expect a Fed rate increase on Wednesday. Yes, folks, we are 2 days away. Goldman Sachs, great institution. They're saying no rate increase. I will say again, they're wrong, or I believe they are wrong. I believe the Fed has no choice, but to give a quarter point. In fact, if they do nothing, I believe the stock market freaks out. But again, I'm just some guy who's been looking at the market 20 years. Goldman Sachs got a lot of PhDs and MBAs, so hey, I'm wrong all the time. But that's what I believe. I thought I would share it with you. Oh, also Goldman Sachs. Actually, this is Lloyd Blankfein. Lloyd Blankfein is the ex-CEO of Goldman. He is now being paraded around business channels. He believes that the bank rout that is currently going on and the liquidity draining from the system is going to depress growth. It just is, folks. I know a lot of people want to act like inflation and hyperinflation is coming. At the moment, now this could all change with some gigantic bailout or something, but as of the moment, 7:30 Monday the 20th, the greater risk is deflation. It just is. When liquidity drains the system, again, what I look forward to, this is going to be wild. Write it down. In the next couple of weeks, we are going to get an update about the savings rate. How many times have you and I heard somebody say the American savings rate is an all-time low? I've already told you that I believe that number is just inaccurate because what is happening, just like 1980, 1981, and 1982, you and I are taking our money out of savings and checking accounts and buying treasuries, buying CDs, buying Bitcoin. Many of you are. That equity or that liquidity withdrawal makes savings rate look worse. I cannot imagine how bad the savings rate is going to look. There are people, and I see them in my comments, so afraid they are taking their money out of banks and putting it under their mattress. Now, folks, I don't think that is a great idea. You want to have a couple of bucks put away somewhere, by all means, go nuts. But really, all of it, that's how afraid you are? Most of us don't have 250. If you are under 250K, the FDIC has a clean track record. But that doesn't matter. As I told you weeks ago when this has happened, consumer psychology is dented. The consumer is scared. The consumer is conserving. The consumer will cause a recession all by themselves. So I expect the savings rates in a couple of weeks to be shockingly low and blow the mind of the talking heads on TV. And it will be for a logical reason. You and I are afraid. You and I are buying gold, platinum, silver, Bitcoin, whatever. It's what we do. When consumers are scared, they react. They overreact. They get emotional. And that is what is going on today. Warren Buffett. I don't know if, I guess I'll say it this way. I think it's fair to say that Warren Buffett is a wonderful negotiator. I think that is fair to say. Warren Buffett got 10% interest plus warrants from Goldman Sachs back in 08 or 09, whenever that was. I would say Warren Buffett likes to really squeeze that fruit and get the maximum juice because, again, he has a robust balance sheet. He has tons of cash. He can raise money at the snap of the finger. He wants to use that position. So if you are going into a negotiation with Warren Buffett, you probably don't want to tip your hand. Is that fair to say? I think that's fair to say. What happened? President Biden let it slip that Warren Buffett is in contact in helping to negotiate, work on, coach, whatever you want to call it, the regional banks. Now, it is my uneducated guess that President Biden, Yellen, all the powers that be would like Warren Buffett to write a check, would like to use his stamp of approval that everything is okay, like JP Morgan did in 1907. They're hoping Warren Buffett is today's JP Morgan, I believe, from 1907. However, you tipped your hand. You lost negotiation power. If I was Warren Buffett going into this environment, the cost of my signature just went up. It was bad negotiation, in my opinion. But we'll see what happens. We'll see if anything happens. Warren Buffett, again, is going to be the savior. Now he has all the power. You gave him the power. Maybe he'll wait for more pain. I don't know. Let's see. Banking crisis. So what else is going on in the banking crisis? Again, one of the things I want to highlight is we are in a liquidity crisis. We are in uncharted territory. I would advise, as I've said many times over the last couple of weeks, take deep breaths. Don't overreact. Don't go all in. If you are going to buy stocks or dip your toe into regional banks or anything that is highly volatile, please do it in tranches. Don't buy it all at once. You don't know where this is going. Have stops. Be careful, right? Don't get caught with a total loser without stops. These are all things we talk about. And then finally, if it were me, and this is what I am doing, for the next 30 days, I am conserving cash. Not that I need to, but I've just felt like it was something I want to say. I believe we are in uncharted territories, and if Olivia and I, for example, were going to go on a $10,000 trip, not that we have one planned, but just say we were, I would cancel that trip. I want to see where we are going because I believe cash is not trash. Cash is an opportunity. I believe what is coming is going to be amazing, and I don't know where we are. I don't know if banks are going to get revalued. I don't know how bad commercial lending is going to dry up. I don't know when I'm going to get that phone call that says, Michael, do you want to buy this 40, this 50, this 60 unit building? You can step into the loan. You can assume the loan. All we need is $100,000 or whatever it is. I don't know. Just for the next 30 days, I'm generally conservative, as hopefully you've seen, but I am going to watch between today and call it tax day, right? April 15th. Okay, a couple of more points just again on full disclosure. The buy box session, which is next Sunday, 6 days away, is sold out. Yes, folks, it is my intention to do this again. My intention will be to do it for another 100 people because I think it is very valuable. It helps you get focused, and I love answering questions. I will complete this one first because I would like the second one to be better. If you want the recording of this one as soon as that is available, you can reach out to me via DM on Instagram or via my website, One Rental at a Time, and tell me you're interested. We will work out a $47 fee, probably via PayPal. I will add you to the list. Everybody that is in this 100, you are going to get the video as soon as it's available. I'm guessing about a week. But again, I will do it again. If you want the first version, you can arrange to pay me the $47 and I'll add you to the list. And then lastly, because again, full disclosure, I just completed the first run of my taxes as I did yesterday. And lo and behold, I owe about $80,000 rough and tough. You know, we still got some things to look at that might take it down just a little. But yes, one rental at a time, real estate portfolio, all of that. I owe the IRS in California about $80,000. That is important to me because I want to be bankable. I do not want to write income down to zero because then you are not bankable. You can do the math and back into what you think I might have made, but I owe $80,000. It is what it is because I want to be bankable. In an environment that's going forward, I want tax returns that show income because that is how I am going to get more deals. If we go into an environment where there are issues in real estate and I get a call again, which I have had before, from a bank VP that says, do you want to buy this building? And I show them a tax return with zero income, that is a problem. So again, one of the things that I do that's very different than other, I don't know, investors, they try to write everything off. I don't mind paying my fair share of taxes. So this year, total, all in, not including property taxes, this is IRS in California state, is about 80 grand. So it is what it is. I wanted to share that with you. Folks, we have an amazing day. We got Taylor, a 10-year Wall Street veteran, coming. We're going to do the hub call. We're going to talk to Brian Adamson. And then we are going to talk to the one and only Greg Dickerson. A lot of you asked, where is Greg? We got to talk to him. The world is imploding. We got it confirmed 10 o'clock today. I'm so excited. All right, everybody, take care. Like, subscribe, comment. Become part of One Rental at a Time. Become a part of the people that do the work, that encourage each other, instead of sitting on the couch doing nothing. All right, folks, take care. Like, subscribe, comment, and share the channel. Let's get to 50,000 so we can party in Vegas. Bye.